Okay, good afternoon, everyone. It is my pleasure to welcome you all to the launch of the UNEP FI and European Banking Federation high-level recommendations on the application of the EU Taxonomy to core banking products. My name is Eric Usher, and I head the UNEP Finance Initiative, which is a UN finance sector partnership working to support and help drive the sustainable finance and responsible investment agendas. This much-awaited report is a result of 26 major banks, 8 banking associations, and 5 observer organizations working together to test, pilot, and assess the complexities of applying the EU taxonomy to core banking products. At UNEP FI, we see the EU taxonomy as the backbone of a really, truly transformative agenda. By increasing market transparency and pointing to what is good enough from a sustainability perspective, the EU taxonomy can help direct the flow of finance necessary towards green and sustainable innovation in the economy. And what you will find in the report are 8 high-level recommendations to regulators, to standard setters, to the banks themselves, which together create concrete steps or provide concrete steps and principles for the taxonomy's practical application to bank lending books. The report takes you through the benefits, but also the main challenges that the banks have seen when applying the taxonomy. And from general lending to SME financing, this is really, I can say, a very in-depth analysis, and it builds on all of the experience of the participating banks in terms of sustainable lending. So we're seeing, I think, quite an unprecedented momentum building up in the industry, widely around sustainability, and a lot of focus here in terms of the taxonomy. Since the launch of the Principles for Responsible Banking a year and a half back, we now have over 200 banks who have signed up to this ambitious UN Sustainable Finance Framework. That's 40% of the global industry are signed on, and banks are progressively committing to accelerating the transition to a net zero carbon economy, either individually or collectively. And they're setting sustainability targets and aligning their business operations and strategies with the Sustainable Development Goals and the Paris Climate Agreement. Of course, all of this momentum and progress is also taking place against the demanding backdrop of the COVID-19 pandemic. Your loan books, which reach down to SMEs, to households, which are the bulk of the European economy, and they are going through a major crisis, and banks are trying to support and finance them through the crisis and through this transition. So it's a multiple set of challenges, both those being faced today and those also getting ready to prepare for and prevent future crises, including global climate change. We're certainly very proud to be participating in this initial phase, to be supporting our member banks and the European Commission in this effort. As mentioned, UNEP FI is a global organization, and we're witnessing the rise of taxonomies across jurisdictions, and we really hope to further support our members in other parts of the world, using the experience of this pilot and European leadership, both in the private sector and in government, to also understand how taxonomies as a tool can work elsewhere in a coordinated fashion. We work with banks, but also with insurers and investors. And what is clear is that this framework generates huge interest from lenders to investors to underwriters, really, truly across the finance industry. I'd like to, at last, to address a special thanks to those individuals that in their respective organizations and banks have participated in this pilot exercise and have delivered their recommendations on time for the Commission to integrate them via the EU Platform Sustainable Finance and the EBA. Very grateful for the very constructive collaboration with EBF colleagues, particularly Denisa and Danielle and their member associations. And we're looking forward to embarking on a second phase to continue this work and welcome more banks and interested parties to join. With this, I pass the floor to Wim Mees, the CEO of the European Banking Federation. I wish you all a great virtual event between today and tomorrow. Wim, the floor is yours.
Thank you very much, Eric. And ladies and gentlemen, good afternoon. A year in sustainable finance feels like a decade, for all the wrong and the right reasons. For the wrong reasons, because we're running out of time, and the sense of urgency for our work should become bigger and bigger. For the right reasons, because there's no doubt, as Eric just said, that there's a lot of interest in the taxonomy, and this is one of the fastest developing regulatory and market areas there is. There is involvement of many stakeholders. And again, that is also for all the right reasons, because we're in this together. And I would never have imagined, and we will hear later from Martin Spolk, I don't think he will ever have imagined that a taxonomy consultation of the Commission would attract 46,000 responses. I guess Martin is a fast reader because we calculate that it will take a year to read for one person, but luckily he has a good team with him. And again, a lot has changed since we launched this project together with UNEP FI, whom I'm very grateful for the cooperation, 1.5 years ago. At that time, we were talking about the EU taxonomy, but it was a different animal from what it is today. It was being developed mainly for investors and with investment activities in mind, including banks acting in that capacity. The traditional banking activities were not in the mandatory scope of the regulation, so we were voluntarily embarking on a voluntary project about the voluntary application of taxonomy for core banking products such as lending to corporates, SMEs, retail projects, export and trade finance to complement efforts of banks in the areas of risk management, financial markets or portfolio alignment. This taxonomy regulation now foresees a mandatory application to of the EU taxonomy for banks for disclosure purposes. The EBA shall advise the Commission about the scope of this application, what will for sure have a significant impact on the banking industry, as it just needs to be. The Sustainable Finance Platform is also looking on how to further operationalize the usability and application of the taxonomy, including for all banks' business lines. So while our report is thanks to the huge amount of work and efforts of banks, banking associations, UNEP FI and the EBF perfectly timed to provide an insight on the application of taxonomy for banking products and provides input to both the work of EBA and to the Sustainable Finance Platform of the Commission, we know very clearly that our work is not done. We need to continue. Yes, today we have reached an important milestone. We like to call it the first station on our journey in a train that we are all in. And this train has to be a fast train. After a short stop at this station, we will be embarking to continue our product again to move to the next station and then onwards on our journey. For the next phase of our project, we will be taking on new passengers, a coalition of the willing, and there are so many. And we will be happy to welcome European as well as global members of the UNEP FI and EBF family, given not only the extraterritorial implication of the EU taxonomy, but also its potential for global expansion of the project. So while the ultimate objective of the next phase of the project would be to deliver more operational guidelines, because there is no doubt that that is necessary to facilitate banks with the taxonomy application, we have to work closely with all other stakeholders, regulators, the European Commission and the EU platform to ensure that all the regulatory and non-regulatory initiatives are coming together in the most consistent, efficient way. We are all in this together. Yesterday, I moderated the panel on sustainability in the International School of Law and Finance of Frankfurt, in which I had very high-level panelists and in which also Madame Lagarde of the ECB spoke. And that message was we are all in this together, and also that we need clear, consistent, long-term goals to work towards. Many of these recommendations are also in the report that we discussed today. So I am aware of the significant efforts that will be required to ensure all the objectives of climate neutrality and the goals for a sustainable economy, and, as I like to add myself, biodiversity are met. So while the EU taxonomy sets ambitious goals and steep challenges for businesses and banks alike, We see it as a driver of the crucial sustainable discussion within in the industry and with our clients. So I hope you enjoy today and tomorrow, and I wish you a very good trip on this train. Please come all aboard, because we leave as we need to leave. Thank you very much. Now, moving on, of course, if you ask yourself on how this work was all done, Eric already talked about Denise Avermaete. Denise Avermaete is a senior advisor at the European Banking Federation and currently in charge of sustainable finance. As I'd like to say, that means there is hope still for all of us, because she can do a lot. She has been with the European Banking Federation since 2006, and she held various positions from payments to accounting to prudential, and she's good in all of them. So she is one of the people that can help us formulate these clear objectives that we need to have. And she is, as I've always liked to work with her, because she's very practical. So Denise, you have the floor.
Thank you very much, Wim, for this very nice introduction, and good afternoon to everyone. But before introducing the panel, I would like to take a few minutes to provide some insight into the report. The objective of our joint project, as we already heard, and the resulting report, is to provide a constructive input in support of the Commission's agenda to facilitate the EU Taxonomy implementation. As Eric already mentioned, the report is a result of collaboration between 26 banks, 8 banking associations and observers, namely the European Commission, the EBA, EFRAG, European Investment Fund, and European Investment Bank, and also Principle for Responsible Investment. The report is structured in 5 chapters. It has been just published on both UNEP FI and EBA websites, so feel free to download, but please don't print. The first chapter introduces the EU Taxonomy regulation and its application to banks. The second chapter is on benefits of the taxonomy implementation, while the third chapter elaborates on the challenges. 4th chapter suggests concrete steps and principles for the practical application of the taxonomy to core banking products. And chapter 5 is on resulting recommendations. We have been following a 3-step approach throughout the project. So based on questionnaires sent to banks, we undertook a gap analysis between current practices in the banks and the EU taxonomy. In the second step, the EU taxonomy, as in the final tech report, was tested by banks on realistic transactions. The subsequent discussion in groups based on sectors and on product types resulted in collective recommendations. Now, 5 of the recommendations are directed to regulators and legislators. The first one recommends to consider the specificities of core banking products, and we will be talking later on in the panel about it. Second recommendation is on the need for consistency between EU taxonomy and other legislation, including that at national level. Recommendation number 3 is not calling for global taxonomy, but for global alignment of taxonomies, facilitation of international data collection, and comparability mechanism. This would facilitate the application of the EU taxonomy beyond EU borders. The 4th recommendation is calling for considerations to address the timing mismatch between corporate data availability and banks' ability to apply the taxonomy and also to disclose against it. Recommendation number 5 addresses one of the key challenges, which is common across sectors. We recommend public authorities to develop tools to improve collection and handling of data to facilitate the application of the EU taxonomy, such as, for example, the EU Central Data Register. The 6th recommendation is for owners of standards and frameworks, labels, and certification scheme that should provide clarification on the alignment with the EU taxonomy or on the gap. And finally, 2 recommendations for banks themselves. One is to start collecting data on a best effort basis for taxonomy relevant information as part of new origination in line with internal strategies and priorities. And recommendation number 8 is calling for industry guidelines for the implementation and application of the EU taxonomy to core banking products. This is actually a recommendation to ourselves. As Wim already announced, we are going to follow up this recommendation in the next phase of the project in collaboration with relevant stakeholders from private sectors and also from public authorities. Let me now introduce our panelists. I just mentioned the need to collaborate with public authorities. So let me start welcoming first the regulator in the room. Slavka Ili, Head of Banking Markets, Innovation and Products at the European Banking Authority. We have Daniela Dietrich-Ristig. Daniela is a climate change specialist at the European Investment Bank. Then we have Lucille. Welcome, Daniela. Then we have Lucille de la Jonquière. She's a Director of Regulatory Strategy at Société Générale. Welcome, Lucille. And then Anthony Bellabriga. Anthony is a Global Head of Responsible Business at BBVA. He's also the Chair of the EBF Sustainable Finance Working Group and the UNEP FI Banking Committee. So thank you very much to all for joining, and special thanks to Tony for improving our gender balance of our panel. Tony, if I may start directly the discussion with you. The very first conclusion, as we have heard, and recommendation of the report to regulators is to consider the specificities of the core banking products. Would you please elaborate a bit? What are the specificities and why would that be different from investment products? And what actually do banks expect the regulators or the legislators to do about it?
Okay, Denisa, well, first of all, let me congratulate UNEP FI and EBF and the 26 banks for this great initiative and the presentation today. And congratulations to the team here at EBF, but also at UNEP FI with Elodie, and for inviting me also in this panel. Well, in our opinion, we think that there are two main specificities for banks when applying the taxonomy. The first one is the difference between clients for banks or investees for investors, and the different scope. To apply the taxonomy, we need to cover as banks a wider scope of companies, not only listed corporates or institutions, but also SMEs, where practically no data will be available, and households. So, and also, without mandatory information from our clients, taxonomy assessment will be very difficult, and could create a symmetry between banks. This wider scope means an increased level of complexity about stock exposures for banks. We are not talking about a few thousands of corporate clients, but hundreds of thousands or millions of customers. This complexity is even greater if you want to apply the EU taxonomy, not only to the origination, but to the flow or to the stock exposure. So the second specificity is about specific financial solutions that we have in banking. For use of proceeds loans or for loans for corporate purposes, we expect to be solved by the platform in the working that they are starting now on usability for banks. That we really appreciate. But there are other specific solutions for banks that are getting more popular, that should be taken into account, such as the KPI ESG linked loans. Products that, in our opinion, can embed ESG targets in decision making and definitely can promote sustainable development. In this case, we see two use cases. One, when targets are reflected in the technical screening criteria, but will not be compliant now, but will be met within a certain time frame. We should see how to cover them, as they will push our clients to be more committed and aligned with the taxonomy at the end of the day. And the second use case is when targets of these loans are not defined under the umbrella of the technical screening criteria for activities defined by the taxonomy, but as a company as a whole. A good example could be a company that set net zero targets by 2050 at an aggregated corporate level. This is not defined in the current scope of the taxonomy and should be developed by the platform on usability. To conclude with this, I think different scopes, different products or specific products, it is very important for us, for banks, the role of the platform on sustainable finance, defining usability as key next steps. This is where we are open, obviously, to engage. We are already engaging with them, and we are very happy to provide our support in this key topic.
Thank you, Tony. Daniela, you have been part of this project, and we have benefited from your experience in aligning the EIB tracking methodology to the EU taxonomy. Do you recognize the issues Tony just outlined, or are there any specificities that would apply to development banks?
Thank you, Denisa, and again, also from my side, thank you for inviting me to represent the EIB in this event. And I mean, yes, surely we recognize a lot of the issues Tony outlines. We have gone, and in fact, we are still going through the process of aligning our own climate and environmental sustainability tracking to the EU taxonomy. And, you know, even for us with the department full of sector specialists, this is a challenging process. And while many of our projects are clearly defined projects that do fall in the scope of the sectors the taxonomy covers, we also do roughly a third of our lending through intermediaries, and this is mainly in the form of loans for SMEs with commercial banks. So the issues, Tony, that you have outlined and the recommendations that the working group put forward in this report, they are very important and they are extremely relevant for us, because in the light of our climate targets, also our work with banks will in future have to increasingly focus on green investments. And this means for us that the underlying green investments will have to follow the EU taxonomy, as we have committed all our financing will. And it has become very clear from early discussions that we are having with our partner banks that there is a substantial amount of support needed, in particular when it comes to translating the taxonomy principles to loans targeting SMEs. And as the EU Climate Bank, we see that there's a strong role for the EIB to champion the adoption of the EU taxonomy in the markets as a framework to track and trace green investments, and to offer help and the support that the banks need to dedicate a growing portion of their lending to green investments that are taxonomy compliant. And this support is coming, and in fact is already there in the form of sharing our experience, providing technical advice in the form of technical assistance, and developing the tools that are also mentioned in the recommendations, the tools that allowed mainstreaming of the EU taxonomy across the relevant client groups. So the point I want to make is that you, the banks out there, you're certainly not alone. There will be institutions like us to provide support, and certainly we will provide support not only to our clients, but also to the clients of our clients and beyond. There are already several ongoing EIB initiatives, including an advisory facility to accelerate the use of green bonds and loans to finance green activities. And there's a substantial support package targeting specifically banks that's funding consultancy services to interested banks, and the development of a set of tools, including e-learning, an online library of guidance material, and several green eligibility check and reporting tools, all with the objective to encourage and to facilitate EU taxonomy application. So please do reach out to us if you recognize that you have a need for this type of support, and we will be happy to engage and to discuss and see how we can take on board the recommendations from the report and best support you and the working group going forward in the EU taxonomy adoption process.
We certainly will do. Thank you very much. As you actually said, indeed, sharing experience, learning from each other, this was one of the objectives also of this project. Lucille, if I may turn to you, what would your main participate in this project? What are your main initial observations? What would you recommend to a bank that have not yet started or is at very early stage of the implementation process?
Thank you, Denisa, and good afternoon, everybody. So maybe it's important to mention that this has been a very useful, concrete experience of the applicability of the EU taxonomy for Société Générale, but also for all the participating banks. And we thank warmly the UNEP FI and EBF for putting that great coalition together, and we are looking forward to the phase 2 of this project. In a nutshell, what this experience of the applicability of the taxonomy revealed together is that we are all strongly motivated to use the taxonomy as a fundamental tool to green our activities and serve our clients' transition. And when you see the bunch of practical case studies that we've put together, I think you can be convinced of how motivated we are, and we thank again UNEP FI and EBF for putting those use cases available to all via the report. So Wim already mentioned, as well as Eric, all the great merits of the EU taxonomy. But indeed, at Société Générale, we are very enthusiastic by this common sustainability language that provide clear sustainability targets. And from this perspective, we would like to thank the European Commission, the TEG, and also we are very grateful to the Platform on Sustainable Finance for all the effort that they're currently dedicating to move forward. And we know there are plenty of things to do. But having said that, and as Tony mentioned, as well as Daniela, we can reasonably be saying that we've been facing exactly similar type of difficulties to make that tool as efficient and practicable as we want it to be. And those challenges are already commonly known now within the policymaking community and within the financial industry, and the report details them very well. But in a nutshell, just to share our experience, we have tested the taxonomy on our credit portfolio for the energy sector, but also for the automotive sector, real estate and manufacturing. And the conclusion we've reached are quite interesting. In terms of technical screening criteria, we have observed that the data was available for 60% of our exposure, but not necessarily with the similar level of granularity that is provided into the taxonomy. But we think it is encouraging. For the energy sector, we found the data was of good quality, same for automotive, but less for the real estate sector and far less for the iron and steel sector, where the data is kind of missing. More importantly, and Tony underlines it already, the biggest challenge is actually the absence of evidence of companies' alignment with the do not significantly harm criteria and the minimum social safeguards. And we are expecting that these data challenges will be further exacerbated, as you mentioned, for application of the taxonomy on SMEs, also for the application on retail customer mortgages and auto loans. And I'm not even talking about the activities that are outside of the EU, because obviously the do not significantly harm principles are based on EU norms, mostly based on EU norms, so we can't expect activities outside of the EU would be consistent with that, at least on the short term. Also, what will be very helpful in the future for the applicability of the taxonomy is to have more clarity on the activity segmentation of our clients. And this is key for the application of the taxonomy on our general purpose loans. The report underlines very well, saying that it's a bit more than 50% of bank balance sheet in Europe that are composed of general purpose loans with unspecified use of proceeds. So it would be very helpful to have this segmentation based on the same NACE classification granularity as the taxonomy. Now, Denisa, you asked if I could give one recommendation. And I think if there is one to make is to have a flexible approach on the DNSH and minimum social safeguards. And I think all my peers will agree on that. Having proxies based on the country of location and assumed compliance of clients with relevant legislation with the DNSH would be very helpful. We can obviously complement with information provided by existing environmental and social external tools. We have notably in mind the rep risk, which could be very helpful for the minimum social safeguards. And I mean, this is the only solution we see, because we've tested some of the very best practices to apply, to see how companies can be aligned with the DNSH in particular. We have been relying on expert judgment. We have been gathering deal level information from past deals. We have also information on certain of our clients already. We have also been on a case-by-case basis checking environmental and social policies in our clients' website. And the least we can say is that this exercise is incredibly resource and time consuming, because we need to have an entity by entity approach. And as Tony mentioned, it seems a bit not very much realistic to exercise it on all our bunch of clients, large corporate, but also SMEs and retail. So as underlined in the report, and this is a recommendation you're making to banks, is we need to work, and this will be the object of phase 2, we need to have commonly agreed industry guidelines to assist us in the pragmatic application of the taxonomy. The taxonomy is no longer voluntary for banks. It is becoming mandatory with the forthcoming green asset ratios. So we have no choice. We definitely need to work together and find pragmatic solutions to those obstacles.
Thank you very much, Lucille, for this insight. Very helpful. You mentioned it, Wim mentioned it several times. I think he couldn't be more explicit that when we embark on this project, it was a voluntary application. Now the rules of the game are changing. The EBA is working on the advice to the Commission that will specify the scope of the mandatory application for banks. There were some references to the taxonomy also in the EBA discussion paper on this. So Slavka, turning to you, how does the EBA see the use of taxonomy by banks?
No, thank you, Denisa. Good afternoon to all of you. And first of all, also congratulations to the UNEP FI and EBF on this report and on all the work done there. It's certainly a very helpful contribution into the discussion on the use of taxonomy. And thank you for inviting me here today. Yes, so we are currently finalizing the advice on Article 8, so on mandatory use of taxonomy for banking sector and investment firms for reporting on taxonomy alignment. And I have to say that basically all the issues identified in this report published today are the same one we were facing when preparing this advice, and those issues are there, and we actually are trying to propose solutions on how to overcome some of these issues for the purpose of the disclosures, not for the everyday business and product design, which I will be talking about in a second. So first of all, the Article 8 alignment, we understand it basically as the green asset ratio, which banks will have to disclose and on which the EBA is talking about for some time as a good metric for disclosure. So we are actually very positive about these disclosures and ability to contribute into calibration of the green asset ratio for the purpose of Article 8. So recognizing the same challenges which are in the report as non-EU exposures, not available data for SMEs and some corporates, and also the time gap between disclosures and available information, we actually are suggesting different practical solutions, including sequential approach, starting with portfolios for which data are available, also recommending extending the scope of MFRD disclosures, and building banks' disclosures on obligations of corporates and SMEs to disclose, while also motivating banks to, of course, collect data internally and try to build database the same direction as the report says. In a similar way, for the retail exposures, we are only building on those portfolios where some kind of taxonomy relevant information might exist. But the question was, and the last one, sorry, is very important one, is use of ranges of estimates and proxies, which is a necessary step where data are not available and on which more technical work needs to be done. But coming to a question, Denisa, on whether EBA already see the use of taxonomy, in the report on consultation paper on the ESG risk management, we are making 3 very specific references to the use of taxonomy, and we are trying to inspire banking sectors to look also to that direction. So first of all, taxonomy criteria can be well used when banks are internally developing their ESG indicators and criteria they will be using for risk management approaches of ESG risks, because that can be very helpful already to look on the type of criteria for what is considered as sustainable. Second is using taxonomy when setting strategic objectives and targets, because taxonomy alignment can be be effectively used for very smart objectives which are measurable and on which banks can monitor, and having it aligned with taxonomy is also making sure that it's aligned with 2030 and 2050 EU targets. So, and the third one is the design of sustainable products, which is going forward for new exposures as green bonds, green loans, sustainability loans, all those products which banks are now working on. So, of course, it's very useful to build it on taxonomy. And the last one I would mention is also potential use of the taxonomy for scenario analysis and stress testing. And as you know, the EBA is just now finalizing the pilot sensitivity analysis, where we already asked these volunteering banks to provide the first mapping of certain exposures to the taxonomy. And then we will be exploring further how taxonomy could be efficiently used when working with scenarios and some buckets of exposures. So this is where I would stop for the moment. Thank you.
Thank you very much. Well, it's reassuring to hear that the issues identified in the report are shared, although not surprising, obviously, and also good to hear that they might be hopefully solutions for that. So we are looking forward to work, Slavka, with you on that. If I may turn now to Tony, actually, Lucille already mentioned one of the recommendations she would choose as the top. While I recognize that all are important, some may take a bit longer or could be more challenging to address. Which of the recommendations you believe should be addressed as a matter of priority that would substantially improve the operationality of a taxonomy? Or maybe it's a combination of all.
Yes, yes, Denisa. No, coming back to the recommendations, but before to move on your question, I would like to use half a minute to comment on the Slavka comments, remarks about the work that they are doing and the transition that we have now becoming mandatory, the taxonomy. We have seen that applying taxonomy is very challenging for the flow, for the origination, but it's even more challenging for the stock, where it's not only a question of reporting, because use of proceeds of past loans is even more greater. So that's in one side, this is something very important for us. And also we celebrate that the EBA is considering additional information about sustainable finance that maybe is not taxonomy compliant, but can promote financing transition. That's in the last consultation. Regarding the recommendations, I would like to highlight that, all are important, obviously, all are important, but maybe there are some of them that are very critical or specific for banks, in terms of timing also as well. So the two connected, the 1 and the 8 are very well connected. So on the one, we ask that the regulators and legislators should take into account the specificities of the banking solutions. And as I said before, it is critical now the work of the platform of sustainable finance. We are really optimistic as they have created a specific subgroup on banking and usability, which we celebrate. And as I said before, we are going to engage, we are starting to engagement with them. And in following this phase 2, that is very critical. And I think this report will be a great baseline for this dialogue. And then that recommendation 8, that relates to what we have to do as banks. And this idea that also was introduced by Lucille about these guidelines to implement the taxonomy to specific products, focusing on methodologies and reporting guidelines. I think that these are the two main specific recommendations for banks that are very relevant. Also, the recommendation 7, when we say we ask to start at the sooner the better, data collection of information that we have as banks and do our best efforts to apply taxonomy. I think this is very relevant. So the best recommendation for banks could be start the sooner the better. In our case at BBVA, we have done this exercise, trying to adapt our internal standard following taxonomy. Although it's not all information available, we have added specific products to have adapt some criteria for non-EU activities. But at the end of the day, we are already piloting taxonomy in our flow. So I think that's the most relevant recommendations for that for the report.
Thank you, Lucille. Tony already mentioned transition finance You have been also talking about the lot of activities that banks are doing like different activities banks are doing to help the transition. How does the taxonomy fit into the existing efforts of the banks to support sustainability transition?
Thanks, Anissa. So the report already underlines well that we, all the participating banks, we are committed to accelerating this transition to a net zero carbon economy by 2050. And indeed, for Société Générale, we are definitely a becoming energy transition bank. And this is what has driven partially our engagement with the UNEP FI and EBF initiative. We are actually convinced that the transition will be done with and by our clients. And our focus is mainly on long-term engagement with the client rather than on an immediate divestments. And we are notably doing so by aligning our portfolio, our credit portfolio, with the objective of the Paris Agreement. I'm not going to detail the very vast, multidimensional, ambitious offerings of Société Générale in terms of investment, financing, advisory solutions to serve our client transition. It's just important to mention that we are the world top financer, part of the world top financer in renewable energies. And we've been for a decade very active to support our client shift to renewable energies, production and consumption. But there are plenty of other initiatives, and I'm not going to detail them all. To respond to your specific questions on the transition activities within the taxonomy, actually, since 2018, so it was quite early, we have been at Société Générale with our peers questioning how the EU taxonomy could provide greater consideration to those companies that are engaged into a transition towards the goal of the Paris Agreement. Because what's proposed today is a very good start and it's scientifically based, so we are not putting that into questions, but it's also very contained. We have transition activities, but with very strict and ambitious starting thresholds. And also, we notice that only those companies that are engaged into a maximum 5 years decarbonization trajectory or alignment trajectory are considered in transition. So in fact, this has already been identified by the Commission, I think. But with the current approach, the taxonomy could indeed de facto exclude those companies that are engaged into a decarbonization trajectories. I mean, they are treating them equally as companies that are not at all engaged into a transition pathway. The taxonomy does not either capture those companies with activities that are outside of this of their list. And those companies may also invest in alternative, let's say alternative energy, but with not necessarily a starting threshold that is the same as what the taxonomy is proposing. So those issues, I think, have been identified. But now if you're talking to me about how we are going to use the taxonomy for transition, the answer I will give is at this stage, as it stands today, we need a complementary tool to the taxonomy. It cannot be the unique tool. We need complement. And this is actually what we're doing in our strategy of corporate credit portfolio alignment with the goal of the Paris Agreement. Because measuring alignment of our credit portfolio actually need reliance on climate scenarios. And also points to scientifically defined transition pathway from client initial activities to transition to green. And this is what is missing in the taxonomy. Well, I do not resist, obviously, announcing that since the Katowice commitment we made with our friends at BBVA, notably, but also BNP Paribas, ING, and Standard Chartered. So we made this commitment in 2019 to align our portfolios. We have already started this alignment exercise. And we are doing so using a steering tool that we are applying on the stock of our credits for certain sectors to measure the extent to which the stock of credit is aligned or misaligned with trajectory, sector-specific climate scenarios that are consistent with the objective of a net zero emission by 2050. Of course, there is.
I don't want to interrupt you too much, but I'm aware of the time we have remaining 5 minutes, and I still have many questions. But at least I would like to take the opportunity to ask a question to Slavka. I think what you mentioned is absolutely relevant. It's something the platform will be addressing in the coming months that we know. Mentioning actually the platform, Slavka, my question was to you. Once they develop the taxonomy, have been talking about the use of taxonomy, and of course we talk for the time being about the climate change, adaptation and mitigation. Once it develops like further and probably also incorporating the negative impact and the social taxonomy, so how do you see the use after that, those developments?
Thank you, Danisa, for this question. Of course, there is a lot to be discussed about this, but I would share with you, let's say, my remarks, which are more personal, professional. So it's not an official EBA position or what is going to happen, because it will very much depend on specific mandates given to us. So it's more kind of sharing my thoughts on the point. So the current taxonomy already includes four subcategories inside it. So we have the green mitigation, we have transitional activities, we have enabling activities, then we have green adaptation, and then we have those which are already excluded as harmful, and we will have harmful activities defined by let's say brown taxonomy being developed by the platform. So let's see, it is already a very useful categorization tool, and it has been designed as primary categorization tool, but within those categories, each type of assets will have to go through a different path to transition. So let's say transitional activities are meeting the 2030 targets, but they are not meeting 2050 targets. So we know that that group of activities will have different transitional risk compared to those which are already 2050 green, fully aligned with 2050 targets. So one idea is that we can build actually our risk management approach around this categorization and embed the risk-based indicators within those categories, because eventually what is behind it or why? So if we recognize that the current taxonomy is science-based and is aligned with the EU 2030 and 2050 targets, I think we can reasonably assume that public policies in energy, transport, and all the sectoral policies will catch up and will sort of be aligned through regulation with those targets. So in that perspective, we can use this categorization to try to think about those type of assets as having different level of transition risk eventually, because the regulation will move also certain direction. And then a link to this, we could also think, okay, so is this a good tool to start applying some more scenarios for risk analysis, stress testing, sensitivity analysis on this type of portfolios? And maybe that could be the way how we could further elaborate the use of taxonomy, in addition to those points I already mentioned in the previous intervention. So I see a big potential for the use of taxonomy, but I think it still needs a lot of work, discussions, and understanding of exactly what the taxonomy includes, what are those subcategories, and how to work with them in combination with type of products and business banking sector is using.
Thank you, Slavka. A lot of food for thinking. Daniela, I would like to have one last question for you, maybe very quickly, because through InvestEU, the EIB group is likely to be an implementation partner for 75 of EU guarantees. The Commission also plans to launch a climate tracking methodology and sustainability proofing that will make use of the taxonomy. Also for SME financing, the EIB group may adopt simplified criteria referencing to the taxonomy. So how do you expect these developments to impact further adoption and promotion of the EU taxonomy, including probably beyond the EU borders? I'm sorry for that, but if I may ask you to be quick, because we still have a closing remarks of Martin that I don't want to cut on. Thank you so much.
Thank you. I will. I promise I will be quick. So there are several elements in this question. Let me just start very briefly with the last point you made about the taxonomy also reaching out beyond the EU. I mean, it's certainly the intention of the taxonomy to be applied consistently, at least to what EU funding outside of the EU borders is concerned. We just have to see that we are only in the very beginning of this process, but then, as Wim said in the kicking off of this event, it's fast evolving. And for the EIB, I can say that our degree of ambition in terms of climate certainly holds equally outside of the EU. So in broad terms, the EIB will apply the taxonomy criteria to all its operation globally. And of course, we have cases where the principles are defined in reference to EU legislation, and it's very clear that it's necessary there to interpret and adopt these principles locally. The advisory tool and the online tools that I mentioned earlier, we are also replicating these across all regions, meaning that the same support will be accessible to banks operating outside of the EU, and it will be aligned with the EU taxonomy. Then you mentioned the Invest EU. This will certainly have a significant outreach. The sustainability proofing and climate and environmental sustainability tracking that you mentioned, it will be applied by all the Invest EU implementing partners. It will be the reference point for private investors and for financial intermediaries participating in the program. And taking this into consideration, of course, we can expect that there will be a significant spillover also beyond the Invest EU program. In general, we also anticipate that looking at the EIB's established commercial relationships with quite a large number of banks and our early adoption of the EU taxonomy requirements, this will also help encourage these banks to accelerate the adoption of the EU taxonomy framework, and this will be in the same inside and outside of the EU. Now, to emphasize what was already said several times by the panelists, and also to conclude, again, what will be crucial for such acceleration, specifically across the different banking products, it will be a common definition of workable and pragmatic, and as you said in your question, simplified green tracking approaches for vital target sectors such as SMEs. And then again, I just want to mention it again, what's important is the support needed in the form of capacity building, in the form of developments and making available tools and solutions. And it comes out extremely strongly in the recommendation of the report, and it also comes out extremely strongly from the discussion that we have with our banking clients. And it's something that we are very much interested in terms of a continuous cooperation with the working group going forward. Thank you.
Thank you very much. Actually, thank you very much to all of you. I would still have a lot of questions, but unfortunately we are running out of time. So it's good that we are also concluding on a positive note and a call for collaboration. Well, tomorrow we will be holding 2 interactive sessions of 90 minutes, one on corporate loans and data challenges, and one on SMEs and retail lending. There will be also opportunities to ask questions, so please follow tomorrow on the same link. And now it's time for me to conclude. One thing that became clear, not only in this panel, throughout the project and also beyond, that we all agree and support the sustainability objectives, the Commission on its efforts to deliver on the action plan, and also that on a taxonomy as an important tool in delivering on these objectives. The how to get there is always more complex. It requires a lot of efforts from everyone, changing the business as usual approach and a good dialogue and understanding between all stakeholders. The report is indeed a constructive contribution to the debate. It's aimed at facilitating the taxonomy implementation, and we are looking forward to continue working with the Commission, with Slauka and her team and others to support the process. I'm therefore very happy to introduce our next speaker as well, Martin Schulz. Martin is the head of unit on sustainable finance in the European Commission. And I'm very happy to welcome Martin and hand over for concluding remarks. Thank you very much, and thanks to all for this fantastic panel.
Good morning. My name is Martin Schulz, and I head the Department of Sustainable Finance in the European Commission. I'm very honored to speak at this distinguished conference on sustainable finance. I have been asked to tell you a little bit about what is coming next after we have implemented a number of ambitious actions on the existing action plan. But before I do that, let me just sum up where we have got so far, and only then I will move to the next chapter. Since 2018, when the Commission adopted the first action plan on sustainable finance, a lot has been achieved. 3 legislative proposals have been adopted: the taxonomy regulation, the disclosure regulation, and the climate benchmarks regulation, and now they are entering into force gradually and progressively. The Commission has also worked very intensively with the private sector because we believe in a very strong partnership between the public and private sector, and we have developed a number of concrete tools and frameworks that would help the financial sector mobilize their money capital towards sustainable investment. Just to name a few: taxonomy, the technical expert group on sustainable finance that we established in 2018, developed the first blueprint of climate taxonomy. The technical expert group also developed the first blueprint of the European Green Bond Standard, climate benchmarks, and also climate relevant disclosures for corporates. Now we are moving to the next stage, and we are thinking what next we need to do in order to keep the ambition high. It is very clear that the action plan on which we have been working over the last 2.5 years is a very good basis, but it is not sufficient in the current context. There are 2 major developments that have really changed the landscape of sustainable finance. The first development is the European Green Deal. The European Green Deal is the first top priority, policy priority of the European Commission. We have made it very clear that the European Commission and the European Union would like to achieve climate neutrality by 2050, and we have also recently increased the target for 2030 for climate and energy targets. It is clear that the ambition with which we have pursued sustainable finance until now must be increased. The second context, which is changing the landscape tremendously as well, is the recovery context. When the crisis started in spring this year, there have been some voices that we should put the sustainability agenda aside, and we should wait first for the recovery to happen so that the sustainability agenda can come back again. Well, we believe that these 2 agendas, a recovery context and the speedy recovery and the green transition, can reinforce each other. And ultimately, there is no trade-off. We do strongly believe that the recovery package that the European Commission put forward and now is being negotiated can accelerate green transition and all the progress we are trying to do on sustainable finance. And vice versa, sustainable finance can help a lot to accelerate the recovery. We just need to make sure that the recovery is done in a way that is supporting the European Green Deal objectives and not undermine it. In this context, it is clear that we really need to shift the gear to a much higher ambition, and we need to also think very, very hard together with the private stakeholders on what needs to be done next. We launched a comprehensive public consultation on the renewed sustainable finance strategy in April. We received more than 650 responses to our public consultation. We have structured the public consultation into 3 clusters. First, we thought that it's needed to establish a first common basis, a kind of ecosystem for sustainable finance. And there we are still having some gaps, for instance, disclosure requirements for corporates, or how sustainability ratings or credit ratings are working. So this is the first cluster, making sure that the foundations for sustainable finance work as they should. The second cluster is about maximizing the impact and maximizing the opportunities that the private sector, and not only the financial sector, but also businesses have with this agenda. So here we are looking how to mobilize retail investors, how we better align the private and public capital, and many other aspects that we have explored in the consultation. Finally, the third cluster that we are looking at is how to manage risks, and how to manage risks better not only of individual institutions, but how to manage risks of the system overall, how to increase the resilience of the financial sector and businesses overall much better. Now, let me be a little bit more specific and highlight 6 areas where we believe we need to do better in the next strategy. The next strategy is going to be presented by the Commission in coming month, and we are now elaborating on the way forward. I cannot tell you today how this action plan will look like, but let me share with you maybe 6 themes of our deliberations, of our thinking. First, we need to make sure that we are shifting the mindset from greening finance to financing green. We need to make sure that the financial sector is part of the solution and is supporting the businesses and companies on their transition pathways. Of course, we need to make sure that we are still greening the financial sector, but the focus now needs to be more shifted towards making sure that the financial sector, again, supports the businesses on their transition pathways. And here we are not talking only about businesses that are green today already, but in particular about businesses that are not yet green, that are not yet sustainable, and where the financial sector needs to support those businesses on their transition pathways. So here we need to think harder how to accelerate this transition, not only towards sustainable investments, the dark green space, but also how we can accelerate the transition from activities that are currently significantly harming environment to activities that are providing less harm, how to reduce the harm. The second theme and the second topic I would like to share with you is, in the context of the recovery, we need to think harder how we can make the private frameworks for sustainable finance better aligned with the frameworks and tools that the public sector is using. This is very relevant, especially now in the recovery context, where a lot of public money has been poured into the system. And we need to make sure that this money incentivizes the private sector to steer the action in the right direction. We have launched several initiatives in this respect. We are now exploring inside the Commission how, for instance, the EU Taxonomy and the European Union Green Bond Standard can be used also by the public sector. The third topic is about making sure that we are comprehensive enough, that we go beyond climate. Our action plan from 2019 has focused and prioritized climate objectives. But we need to make sure that now with the new plan, with the new action plan, we are going beyond climate, and we are also extending our attention to broader environmental objectives and issues, social objectives, and governance issues. This crisis has made it very clear that we need to pay attention to the social issues, and as part of the platform on sustainable finance, we are now exploring whether the taxonomy could be and should be extended to social objectives. When it comes to governance, the European Commission already announced an important initiative on this next year, and you will certainly hear more about the Commission's proposal, how to mainstream sustainability considerations in the way of how corporate governance works. The fourth issue is about promoting long-termism. Promoting long-termism was one of the key recommendations of the high-level expert group from 2018, and we have followed up on that, yet we have not yet had many actions. So with our new action plan, we would like to articulate better how we can translate the big targets, how to achieve climate neutrality by 2050, how to increase the climate and energy ambition before 2030, what it means for the companies, what it means for the financial sector, and what needs to happen on the transition pathways in between. The fifth issue is about resilience. I have already talked about the need to make sure that we don't only look at the risks that individual institutions are facing, but about the risks that the whole systems are facing, and the resilience that the system needs to have. This crisis has made it very clear that our systems, the financial sector and the corporate system, need to work harder on making sure that the resilience is much better. Finally, we need to look beyond Europe. We are very confident that we will reach all these ambitious targets I talked about, but we need to be aware that even if we are successful, and we will address, when it comes to climate, only 10% of global emissions. So we need to look beyond the European Union, and we need to find ways how we can accelerate this positive development, not only in the European Union, but in other countries. And there are positively already some countries who are working very hard on promoting sustainable finance in their jurisdictions. Nevertheless, currently there is not a forum where the jurisdictions would speak with each other and exchange notes who is doing what. So for that reason, a year ago, the European Commission initiated a new action to launch a so-called international platform on sustainable finance, which is gathering all key jurisdictions that are very serious in promoting sustainable finance. This international platform celebrated the first anniversary 10 days ago, and we are very happy to see the progress, not only in terms of mapping who has done what, but on the ambition to converge on some of these frameworks, taxonomy, green bond standard, and disclosure going forward. Now, I would like to say that for the European Commission, for the success of the new strategy, it's very important that we continue this very strong partnership between the public and private sector. We started this project with the high-level expert group on sustainable finance back in 2017. And the recommendations that we received from these experts were really outstanding. For that reason, we have established this technical expert group on sustainable finance that supported the European Commission over the last 2.5 years. And this partnership was a big success. Now we have to make sure that this success is also translated in the way going forward. We have established a new platform on sustainable finance that will now support the European Commission in developing taxonomy going forward. Those of you who are familiar with the work of the European Commission on taxonomy know that before the end of this year, the European Commission will adopt a delegated act on the climate change adaptation and climate change mitigation objectives. Yet there are still 4 environmental objectives on which the delegated act has to be completed, and we will do so next year. But we need to work with experts, we need to work with the private sector, and not only the financial sector, but with corporates and experts, academia, NGOs, who understand the different sectors and the scientific expertise that we need to have. So this platform that we established 2 weeks ago will work over the next 2 years at the very minimum to help the Commission to make sure that the taxonomy is expanded, is developed beyond the 2 climate objectives, but also make sure that taxonomy is workable and usable on the ground. We are very encouraged by the progress achieved on the ground, but we need to make sure that taxonomy is really being seen by stakeholders as a positive tool that is making a positive contribution and is useful rather than a regulatory burden. Now, what you can expect from the Commission in the beginning of next year. There will be a big legislative proposal that will also be another game changer on sustainable finance, and that is the review of the non-financial reporting directive. So far, we had a gap between the disclosure and transparency by the financial sector, on which we had already legislated, and the disclosure and transparency provided by the corporates. We already have a legal framework in the European Union, the so-called non-financial reporting directive. We also have the guidelines supporting this directive, but it's clear that this directive is not fit for purpose in the current context. So the European Commission announced that we will table a legislative proposal that will not only integrate the work of the TCFD that has been already agreed at a global level, at least at the FSB and G20, but we will go even a step further, and we will not consider only the impact of climate change risks on the companies, but also the impact of companies' activities on climate and on other environmental objectives. So we have a very ambitious agenda ahead. I would like to thank all of you who have contributed to the public consultation on the renewed sustainable finance strategy. On top of the strategy on sustainable finance, we are of course working also on the European Union Green Bond Standard. You have seen that there was another dedicated consultation, and you have also seen that President of the European Commission announced in her speech in September that the European Commission itself will issue green bonds in order to support and accelerate green transition. So as you see, there is a lot of good momentum. We are very grateful for all the great initiatives that you are taking, you are making. And of course, Luxembourg is one of the key stakeholders and frontrunners in this field. Thank you very much for giving me the opportunity to speak to you today, and we will be very happy to stay in touch. Thank you. Have a very nice conference.